Okay, welcome back to Cymex FinTech Weekly Market Insights. This is part three, where we take a look at the macro outlook. Okay, it's been such a mixed bag at the moment. The markets, investors, no one really knows what's going on or what to expect. Data suggests that central banks may be nearing the peak for rate rises, but at the same time that they warn that they'll do more if they need to. And of course, that's pretty much a given for Europe, I would say, at the moment. Now, inflation is slowly dropping, but greed from corporations, hiking prices to compensate for lower sales is, sort of making inflation sticky. It's in my mind, it's holding it higher than it should be, especially when you take into account the fact PPI keeps dropping. Now, the biggest concern is going to be that US debt ceiling. At the moment, it's $31.4 trillion dollars, and of course, it's going down to the wire. As usual, I'd have to say. Republicans are trying to negotiate spending cuts and various other things in return for voting to raise the ceiling. Of course, what they've got to consider, and seriously, is that Yellen has warned them that money is running out, and it could be gone within weeks. And trust me, a US default, if there's no sign of an agreement, could have dire economic consequences for everybody. And it would obviously damage the US, but it's not going to help their reputation. And that seems to be dropping by the year. A lot more unpredictable, and that's the number one economy. I suppose on the bright side, the US and China are speaking again, and relationships may improve there over time. Although China does still have its own problems, exports are well down, domestic demand is weakening too. And I've mentioned it a couple of times, but it's quite possible they may have to cut rates. It'd only be a slight cut, but they could do that, or they could reduce the triple R, which is the banks sort of what they need to hold back in reserve. Now there are risks of stagflation. Inflation, without that growth means sort of it could lead on to recession. So you've got stagflation on one side, but then it's probably a precursor to a recession. Everyone's, not everyone, but a lot of people are still saying, oh, maybe everyone's going to skip and we're going to miss recession. I'm just not so sure. Unless that inflation comes down, I think central banks, as I keep saying, are comfortable causing a recession because they can rebuild much easier than they can get control of inflation. Also, it takes time for all these interest rate increases that the central banks have been doing to sort of filter into the economy and impact the data. It's dropping, demand is weakening, but is it really sort of higher interest rates that's causing that demand to weaken? For me personally, I think it's prices themselves. It's not the interest rates. It's the fact that people are just looking at how much more they're paying for things this year than they did a year or 2 years ago. It's amazing how much prices have gone up. Now, supply chains continue to recover, although I would say sort of commodity-wise, we need to monitor Russia and Ukraine. That Black Sea corridor, this is where they're allowing the export of stuff from grains and such like from Ukraine at the moment, and it's still not decided whether Russia's going to continue to keep that open, to agree to an extension or not. And of course, part of that is going to depend on the sanctions that come out against them. If they go through with this full blast of sanctions that they've threatened to do, especially the EU. Uh, Now, if it does, then that could sort of close a window to a lot of the agricultural products that come out of there, and that could, of course, then see those products rallying, you know, grains. So, and maybe fertilizer as well. Now, Europe will be keen to fill up their gas supplies, their gas reserves rather, over summer. Obviously, they want to prepare for next winter. Fortunately, we had a mild winter, so stocks are high, but they're still going to need to sort of build them up to sort of maximum, I would say, ready for next winter, because you just never know what you're going to get. And of course, they're still busy trying to find those alternative suppliers. They're also trying to sort of build domestically what they can as well, so they don't have to rely on other nations outside of the EU. And some of that is they're actually including the UK in part of that. WTI is back to around $70. It did spike up to 83 after OPEC did that surprise cut at their last meeting. You've got to say that it hasn't delivered the effect that OPEC was after. Lower oil prices is obviously good. It does take that little bit of pressure off inflation. Now, food prices just seem it's just way too high. This is in my mind just the food giants continuing to abuse consumers. All I can say is try and shop local, with your local suppliers as much as possible. Now, the lack of workers from sort of the baby boomers, where they've been retiring or retiring early, I think again that's going to become less relevant as opportunities drop, as we go through the year, because I think there's going to be less jobs available anyway. The dollar recovered towards the end of last week, obviously on hopes that there will be an increase to the debt ceiling. Part of that is the meeting that they should have gone ahead at the end of last week was postponed with the Republicans, which was seen as a good sign, the fact that obviously there's been some progress there. I suppose maybe the horse trading's almost over. It always goes down to the wire, these things. It's happened so many times, almost every other year. To me, it's one of the problems with these midterm elections that they have in the US. They just complicate things. The government quite easily loses control of one of the houses, and then it makes it much more difficult to get anything going. What I would say is expect more volatility to continue in the markets this week. And as a reminder, I am presenting a webinar Tuesday the 16th at 5 p.m. BST on mistakes many traders make. And I hope to offer some solutions to them, and obviously add a few trading tips as well. If you attend these, you will be offered a discount on any of our workshops and courses, but it's only for those that register. This week's is sponsored by Active Trades. Now, the link is below, so hopefully you would like to join. Hope to see you there. Towards the end, ask any questions that you can. And it's going to be interesting. I still make some of those mistakes myself, even after 50 years. So none of us are perfect, unfortunately, especially when it comes to trading. Okay, probably a little bit boring if you've been watching all of it, but just a little bit of a reminder of our services. So we offer a daily newsletter, global news, fresh chart levels and pivot points every day, which is really worth having. And I mean, our traders use pivot points almost religiously. So do I. I mean, you look at some of well, you'll see some of it on sort of the next on part 4 where I do the analysis how good some of the pivot points work. Now, one-day workshops, just so you can find out if trading could be your next career. It also helps to fill in any gaps that you may have because different days, different topics. A 1 week course is going to sort of just help you build those real solid foundations for your trading career. And as I always say, if you've got an inner trader, within a week I will find it for you. Comprehensive masterclass. This is an accredited course. It's designed to provide you with all the knowledge and trading tools that's required to navigate any market, any conditions, and any asset class. If you're really serious about becoming a professional trader, then that is the one for you. On top of that, if if you're trading but struggling in a certain area, then maybe our mentoring service will help you there, or maybe you just want to get to the next level. Also consulting, we help companies and individuals hedging FX and commodity exposure. And also, when it comes to education, we're a leading company and we provide that to individuals, exchanges, brokers. Now, I've mentioned this before, but if you guys are struggling, you haven't got enough capital, or you feel though you haven't got enough capital, or you don't even want to risk your capital, then there's a great opportunity to get a funded trading account. You have to qualify by passing the challenge, and there's a link to it there. But it's a great way to take everything forward. So you're not having to watch every penny, euro, or cent as you're going through, because you haven't got enough in these volatile markets. Now, if you've got any questions whatsoever, then you can contact us, info@cymaxfintech.com. Or if there's anything you'd like to ask me, it's chris.tubby@cymax-int.com. Okay, so the next part is going to be the analysis.